Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
It is the development that has taken the AI world by storm. China's Deepseek AI model is the headline everyone is talking about. The game changing revelation is that Deepseek, a Chinese AI model, rivals the most advanced models like those from OpenAI and NVIDIA, but at a fraction of the cost. This has sent shockwaves through the AI industry, forcing investors to rethink the massive investments poured into the sector. The market reaction was swift, with the Nasdaq plunging 600 points or a 3% drop. Meanwhile, back home, the RBI has announced liquidity measures to address the banking sector's liquidity shortfall. Good morning, JK. With the AI shaking up the equities, how do you view the dollar's recent strength and the RBI's latest move?
Good morning, Swaraj. Yes, the new week actually started, with a newsfield session right from Asian time, in fact. Despite thin markets in the Eastern Hemisphere, as many markets are closed, and Chinese are heading for a long closure to February 3rd. Now, over the weekend, there was a move by Trump administration to impose fresh tariff on Colombia, but that news got some relief after Colombia's agreement to take the migrants after the threat of tariff, and that gave some cheer to the market observers. Then later on, we had the RBI announcing huge liquidity measures as the banking system liquidity had gone into a deep deficit. And they announced variable repos up to 1 lakh 10,000 crores, and they are also going to do a buy sell swap up to USD 5 billion. So 5 billion means about more than 40,000 crores of liquidity into the market. So this is likely to ease the situation and possibly lead to some drop in the 10-year benchmark yield. Also, the benchmark yield is also getting some help from the global buying in the bonds due to risk of sentiment. But the buy sell swap can put further pressure on the forward premium also. Now, we had the Indian benchmark NSE index dropped through psychological 23,000 mark and ended more than 1% down on the day. NSE data shows FIs continue to sell big amounts, 600 million yesterday, total 9 billion in January, and in 4 months close to 20 billion and still counting. So that's a big movement in the FII number as well as in the index. Of course, market awaits where we can see some sort of a trough for the index, even as we head into the crucial union budget on Saturday. Yes, then there was this meltdown in the US tech sector stocks, as you know, as you detailed it, the cheaper AI solution from China, where they are supposed to have invested only 5 million. I mean, which is of course being questioned by many people, and also offering free of cost to the seekers. So that puts a huge pressure on the big tech companies in the US who have invested billions of dollars, and the investors are seeking good return over it. So now although this is even is an evolving story, and the capability, and whether eventually the tech companies in US will also benefit due to higher demand of chips from them is another thing. But the immediate impact is that the market has had a big drop. All the three indices in the US dropped. Dow recovered into positive territory. S&P 500 and Nasdaq were down still. Nasdaq losing as much as 3% to end the day. But the bellwether in NVIDIA stock ended 17% down. Now, just for a perspective, the market has been talking about overvaluation in the tech sector, and yesterday's development perhaps is given a trigger for that overvaluation to get correct and remove some froth out of it, and possibly going forward there can be some more selling in these stocks as investors reassess their commitments, high commitments to the tech sector. And we've always been saying about the big investors keeping more in cash in view of the valuation concerns. And I would think that while yesterday's development is still being assessed and how far it will impact the US tech companies, but definitely for the overall market, it is a development that will give reason for more corrections as well. Now, the good thing about this risk of sentiment is it brought down the bond yields. And in fact, we had a drop in 2-year yield to 4.16 and the 10-year to 4.49, which was trading sometime back only at 4.70, is also helped a huge 70 billion of new auctions in 5-year notes. And the economic news, we had a good news from Germany. IFO business sentiment showed a surprise improvement at 85.1 in January from 84.7. Of course, this one of I don't know whether this is just a flash in the pan or whether we have further improvement in this. So it's something that we would wait to see. But following the raft of news that we have had, we had some statements from Scott Bessant, who is pushing for a gradual 2.5% universal tariff plan, which could move higher by the same amount each month. So that's something big if it really comes through. So the market is once again cautious, on this. And dollar yesterday saw big gains for Europe and also the yen. Yen was gaining due to safe haven, buying, and the euro also got pushed up due to the IFO sentiment, as well as the yields dropping. But these gains have slightly eroded now with the news, fresh news on tariff or fresh statements on tariff by Scott Bessent. And these, currencies are unlikely to see bigger gains as the sword of Trump tariff and uncertainty hangs on them. Players also want to see how the economic numbers that start today, followed by 3 major central bank meetings also. And for India, of course, Indian rupee, could not build on the strength that was seen on Friday. In fact, actually gradually weakened towards 86.35. The sentiment is really down broadly because of the FII action and the stock market falling once again continuously, not finding any support so far, at least. Even as we head into the union budget, I think market waits to see what further measures from the policymakers will be there that can help the market recover. Some people are expecting another CRR cut by RBI when they meet in the first week of February. Of course, the key thing will be how the government pushes through for the growth to pick up, because the recent liquidity crunch is also one of the reasons. Is also the slowdown in growth apart from the FI selling that has been seen as well. So crucial days ahead for the Indian market as well. Rupee nervously stays in that 86.20, 86.40 range, narrow range for some time, awaiting both global and the domestic developments. Thank you.
Thank you, JK. And just building on to yesterday's conversation about tariffs, very interestingly, Colombia's tariff was put on hold after Colombia agreed to take migrants being deported by the US. And as JK had mentioned even yesterday, tariffs are being used as a negotiating tactic, and that's clearly being seen by the world. RBI has announced big liquidity measures, buy-sell swap of $5 billion, 1 lakh crore VRR, as well as OMO purchases. All this should help the liquidity staff banking sector. At the same time, with respect to the monetary policy, some people are now starting to expect a CRR cut in RBI's next meeting, which should again help with the liquidity in the sector. Indian index broke the psychological 23,000 mark, which is Nifty 50. FIIs continue to sell Indian stocks, yesterday selling to the tune of $600 million. So that has kept rupee under pressure because the index is not performing well. At the same time, the meltdown in the US tech sector due to the Deepseek saga is adding to the woes of the equities. Now, again, whether this Deepseek is going to be a theme which is going to be ongoing, or maybe it was just a trigger for the overvalued US tech sector. We'll know as and when the time comes, because AI developments are very quick. Things change very quickly, as JK also mentioned. So it's going to be a wait and watch to see how this story pans out. Surprisingly, on the European front, German IFO business sentiment showed a surprise improvement, which led to some rally in the euro. And when it comes to tariffs, Mr. Scott Bessant has proposed for a universal tariff of 2.5%. So the tariff talks are back on the table. We'll keep tracking this story. That's it. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets. Have a good day.